Hi guys, welcome to another honeystocks.com weekend analysis for the 28th of June 2020. Now, the analysis that you're about to watch, I'm about to flip over to my screen share in just a second. Normally, my weekend analysis will be anywhere between 30 and 45 minutes long. This one, I'm only going to be taking up 5 minutes of your time. I think the best thing for me to do this week is really just to convey my thoughts on the overall market and what I'm seeing. Now, the note that I'm going to be showing you is an analysis that I sent out to our client base before the market open on Thursday. And I think the analysis that you're about to watch is very, very valid for the forthcoming week. I think there's a very definite case to be made after what we've seen on Thursday, Friday, that there are a few little warning signals being flashed at us from technical analysis. Some of you guys won't value technical analysis. I get it. It's not for everybody. But if you are somebody that does value technical analysis and it makes sense to you, this is probably going to be worth 5 minutes of your time. The market, nobody can predict crashes, and I'm not one of these guys that predicts crashes, or I'm not doom mongering the world. But what I do have a little bit of an ability to do is just to kind of spot the early warning signals of when you might want to start thinking about getting defensive ahead of time, because we never know how much a market is going to drop or how far it's going to go. But if you understand what the key levels are and when you might want to start getting defensive, it can prevent a lot of damage. It's a style and a tactic that has helped many of our clients over the last few years. We've had 3 corrections and a market crash, and this approach that I have has enabled me to be able to communicate to everybody in advance before of these big drops. So there are a couple of warning signals that I'm seeing, and I think this is probably worth 5 minutes of your time. If anybody has any questions, thoughts, comments, and drop them in below. If anybody has any counters, I'd love to hear them, as long as it's well thought out and you're not just saying, asshole in the comments, which is something that I can get quite a bit. But sure, check it out, and yeah, let's see what the markets are saying. Good morning, everyone. I thought I'd better get a quick analysis out. I'm only going to take up a couple of minutes of your time this morning for you guys in the US. Obviously, you guys all the way over in Australia, I know it's bedtime nearly, but there's a couple of things that I just want to quickly communicate. I'm getting a lot of private messages about what are the concerns that I've got, because I've posted a couple of charts where I'm really just saying, this is the level that we need to have perhaps defensive action. What you'll find that I do, especially for you new guys, is I'm not in the habit of predicting crashes. I'm not a glory hunter or anything like that. What I probably do have an ability to do, though, is to just kind of spot the early warning signals as to when we might want to start thinking about getting defensive and what that would look like. When we look at the major indices, when we have a scenario where maybe we have a correction or maybe we have a crash, there's always one index that, as I like to say, gets the party started. And what I've tried to do this morning, I know it's rare for me to put out a midweek video, but I just want to highlight the levels, in my opinion, that we need to start thinking about as to what if. The what if scenario is asking, what if we're wrong? What if the bullish environment that we've all enjoyed over the last couple of months comes to a crashing halt? And I think these are the levels that I want to just highlight. So please build these into your own charts. Keep an eye on them. You should really start to be in a place where you've got your own watch lists where you can have a look at your charts every morning. It takes 2 minutes. So these are the charts. Now obviously I've posted the chart for SPY, S&P 500 index. I think we've obviously got a structural uptrend, but I think if we start to break below these higher lows, that might be an environment where we might want to just say, do you know what, let's not take any chances. Because what we have when we get these key levels of support broken, especially if we break below something as significant as the 200 period simple moving average, things can get really bad really quickly. So we just have to be aware of this. Obviously, it's been a concern that the Dow hasn't been able to get above and stay above the 200 period moving average. Jan, I know you've posted a chart about the island reversal, etc. And yes, absolutely it has merit at the moment. So we need to be aware of this. I've built in a bit of a trend line here. Sorry, that should be here. So that's something to absolutely be aware of. I think with the Russell 2000, which I think most of us understand is probably the most susceptible to big drops. Again, I think this would be a level that I would have a lot of issue with. Again, structural uptrend, but when we start to break these lows, especially these key Fibonacci levels, etc., I'd have big concerns there. Tech is obviously tech, but again, you've all seen this chart already. Is this going to be a problem like it has been in the past? We don't know. It would seem like it's a possible scenario that if we see the major indices start to decline, that we see safe haven tech again like we have. But we obviously know that when we got the crash a few months ago, that tech was just as badly hit. So tech is not immune to big drops if we see it. So again, these are the levels that I'm paying very, very close attention to. The mid caps as well is flirting with the 50 period simple moving average, and again we just want to see these level hold as support. So I think the message that I would have is that yes, technically we are still in a bullish uptrend where we're making higher lows, which is a characteristic of an uptrend. But when we start to see these higher lows broken, that's the signal for me to just get completely defensive. I'm not one of these guys that likes to just, hold and hope. I would much rather just get defensive, because you can always buy back into the market again, but you can't always replace lost capital. That's kind of the mindset that I have. This is the NASDAQ composite. Again, big psychological level. I've posted this to social media this morning, and again we're having to be mindful at the moment. I think that would be the message. So this is obviously going out around an hour before the market open on the 25th of June. I thought it was a message worth communicating. So hopefully it comes to nothing. Hopefully the market continues to rally higher and motors higher, but obviously just asking the question, what if we're wrong? So hopefully that gives you my view on what I'm seeing in the overall market. Thanks as always.